Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Tonight, guys, I'm going to introduce to you the bullish family of candlesticks. So on your trading chart, bullish is green, which means green volume. So these are bullish candlesticks. They have all different shapes and sizes. You see some have long wicks, lower wicks, some have real large bodies. Others have a wick at the top and pushing down. What does all this mean and everything? We're going to get into it. So guys, I'm just going to go over here to my tutorials, and I'm just going to go over key points in these tutorials. So I'm going to start off with the most important candlestick that you guys need to learn when you're trading, okay? It's the bullish engulfing candlestick, and the opposite is the bearish engulfing candlestick. But what we're going to look at is the bullish engulfing, okay? So this is the bullish engulfing candlestick, and you want to find these at levels of support because that's where we have buyers, especially if these 5-minute candles are formed at a higher time frame support. So when we're streaming, when we're doing live, you see that I chart the daily support levels, I chart the hourly, because if I start to see 5-minute accumulation and bullish engulfing candlesticks forming at a higher time frame, then when we're scalping, we could look for a play like this. We could see a little bit of a downtrend coming down, selling off, but it's probably reaching a higher time frame support right here. And then we have a bullish engulfing candlestick where it opens and it completely engulfs the previous red candle. So what it means is there is more buying volume than there is sellers in the market on this time frame. So we've completely engulfed all of these previous sellers. And the larger the engulfing candle is, we can expect continuation where we can get into a buy entry and we can make some pips going up. So in this case, it came up to here and it sold off, but it closed, but it still engulfed this candle. And then continuation is right here. Normally you see continuation and then a wick coming down for maybe a retest. But in this case, this is an ignited candle where it's got no wick to the bottom. It's a continuation candle. So you have buyers step in right away and they take it up. And what they do is they fill the previous wick. That's a good indication that we're going to continue to run, because if we fill this wick, then we're going to probably fill the next wick right here. And you can see in that bullish candle we do, and we also get up to here where we engulf all of this price action. So now we're creating a new higher high. So we have now momentum to continue to go up. So we have this indecision candle where it comes up, comes down, but closes with bullish body. And then there's small pullback, but it still respects the uptrend line, and then we continue and it continues going up. So this is where you can get in a trade and scalp for some nice pips. And then there's two trades that you can make. You can start your trade when this thing starts engulfing at the bottom and have your stop loss placed down here, or you can get in on the retest confirmation candle. So there's two entries, and that's what Dave and I tried to show you guys when we're trading live, that there's two trades that can be made. But the one that is the disciplined, the patient trade is this one right here. This is the one with confirmation. Okay, this one could be just your it's like a feeler trade. It's coming in there, and we don't know if this thing is going to completely engulf until the close of the candle. Then we get confirmation, then we can hop in on this candle. Okay, so let's and then you got the ABCs here if you guys want to review all that. But I want to get into the tutorial right here, and I'm gonna break down the key points, the important stuff. Okay, so this screen is very important. Okay, so in this example here, we have, this is the bearish candle, okay? So we're looking at the bullish engulfing candle. So we have a selling candle, okay? It opens here, the wick represents the high of that period, and then we have sellers pushing it down. So this is all selling volume pushing down, where we get a low, and then it closes right here. Now this is going to be our continuation candle. So this is a bullish engulfing candlestick now, okay? See how it forms. So this one, market makers, they gapped it down. Okay, this bearish candle closed right here, and normally when bullish engulfing candlesticks start, they have a gap down. So what market makers are trying to do is push the price down where they can get buyers stepping in at a lower than the support level, so they can get a nice entry. Okay, it's not always the case, but for the most part, probability, this is how a bullish engulfing candlestick forms. Okay, and when you start to recognize these, then you can get into the trades early. And the best times to take these engulfing candlesticks are like after a nice downtrend where you get 3 or 4 or 5 bearish candles coming down, the RSI is starting to get oversold, and then you're reaching a higher time frame support level, like an hourly or maybe a daily support. And then if we start to see bullish engulfing candlesticks forming, this could give us an indication that maybe we can take a buy entry or get ready for a buy. Okay, so this one, they gapped it down to here, little bit of a drawdown with this bottom wick, but then came up, and then look at how now it just fills with green buying volume. And right here, once we get above here, we've engulfed all of these sellers. They're taken out. Okay, so we have nothing but upside to move to. And then when we break out above the wick, we fill this previous wick. Now we're heading up to the upside. So a lot of traders, when they're trading bullish engulfing, there's a couple ways that you can trade these candles. When you get really good at scalping, guys, and you can even drop to a lower time frame. If you see this forming, maybe you can drop to a 3 minute or a 1 minute. I'm going to do those with you guys to teach you guys how to get in early entries. But if you're mastering the 5 minute candles, then just stick with the fives. Okay, because when we move to 1 minute candles, it starts getting a little bit more intricate and more head fakes and things like that. But you can start to see how the 5 minute bullish engulfing candlestick is starting to develop on the 1 minutes. And then once we start engulfing this, so some traders, myself personally, sometimes I take trades down here when I see this forming, and then I'll have my stop loss placed below. But that's like, that's an initial entry. Okay, that could be like an impulse entry. But if you want to be patient and continue to wait, allow the volume to fill, then when we start to engulf this candle and the wick, that could be a buy entry. Okay, but then for the traders that want extra confirmation, and these are the patient guys, these guys are like stones. They wait. I'm like that too, depending on the situation. Every trade is different, guys. So that's why you got to understand the different types of trades that you can make. And then you could wait for the entire close of this candle. Then it closes we get confirmation that we've engulfed this entire candle, and now we're looking entry on our next candle, okay? And next candle can start here and continue going straight up, or it could open and selling pressure could push it down. But what we're looking for is a wick to start being created, creating a higher low support. And again, we want to keep above 50% of this green candle. The probability, if we have a wick forming up here, the probability that we're going to go higher is in our favor. As long as the sellers don't push it down and we take more than 50% of the volume down here, then they might push it down, and this bullish engulfing candle will get just extinguished. Okay, so we got to follow the continuation and where it's going to close, and the next one will open. Okay, so just to reiterate on this one, this is a gap down lower. They don't always start like this. They can start right here, continuation, and start engulfing. But when we notice a gap down, that's a market maker move. They gap it down. That's them doing that. That's not me and you. That's the market makers. Okay, and then they gap it down, and then it fills up. And so we have bullish candle opens at or lower than the previous candle close. And then this green body is all the volume. The length of the bullish candle engulfs the previous red candle right here. So we've completely taken out all of these sellers out of the time frame we're trading, whether it's a 5-minute candle, a 15, an hour, a 4-hour candle, or a daily candle. If you spot this on a daily, like this is a daily bearish candle, then we have a daily close on a bullish engulfing candle, then we could expect the next following day to be bullish. We can get in and start positioning ourselves maybe for a long trade and hold, or we can scalp the momentum. Okay, and then this is the close of the candle. So let's just continue moving on, guys. Is there any questions on that before I move on? Michael, when you say wick, when you say fill the wick, like the one before or with a few candles behind work, yeah. So anything, you know, when we're looking left, where I'm looking for possible profit targets, once we start, I'm always looking left, and I'm looking for wick fills. I'm looking for wick fills because that's where previous price action was. I'll show you when we get. I'll go back to Trading View and I'll show you how, like I set up my charts for profit targets, but always looking left, guys, because that was previous price action. And we, like on last night's call, if you were with us last night, when gold broke out of that triple top, and that's when it just exploded. So that's when we got into the trade and we made all those pips. Okay, because I was looking left for previous resistance. We had the momentum, everything was going in our favor, and it was a beautiful trade last night. Okay, so good question. Yeah, so we can always look left for wick fills. Okay, so this was from last week, guys, and I'm going to go over this again tomorrow. For anyone that missed last week's call, because I started recording it halfway, I'm going to redo it tomorrow, same time. We're going to do the introduction to candlestick. So this is a bullish candlestick. The body, this is the body, the volume. A is an open, and this is the close, D. But then we have an upper and lower wick. You guys probably know now. This is the low of the time period, and this is the high of the time period. Okay, so we'll go over all of that tomorrow again, and then I'll be recording it from the beginning. Okay, so let's look at this screen right here. So this is a bullish reversal pattern. Okay, so when we get a reversal now, okay, so this is a technical chart pattern. It's an engulfing pattern, and it's a buy zone. Okay, so this is what we look for when we're in a downtrend. We've got maybe 3, 4, 5 red candles making lower lows and lower highs, and we have price action coming down. We got to expect that there's going to be a reversal at some time. Okay, and we can scalp this, we can get in. But then if we have a bullish engulfing pattern forming at a level of higher time frame support, then we can get into a nice trade, and hopefully we can profit 10, 20, 30, 40 pips on the reversal. Okay, so the way how these form is you got 3 or 4 vertical red bars coming down, lower low, lower high, continuing down. But then maybe we reach an hourly or a daily support level, and then we start to see a bullish engulfing candlestick form. That could give us momentum that we could now be reversing this bearish trend, and we could now get into a buy situation. So again, we can start to take a trade down here if you feel comfortable like that. But the best thing that advice I can give for new traders is be patient and disciplined, guys. Wait for the complete close of the candle. These are 5-minute candles. So when we're trading 90 minutes, 2 hours, we'll look for multiple entries and you won't get faked out as much, okay? So wait for this candle. Once it closes and it completely engulfs this and we're reaching a higher time frame support level, that could give us more probability that we're going to start now creating an uptrend. So now we could take like a buy entry on this candle, see how much drawdown there is. And if it starts going up, we create a higher low support. We could take a buy. Stop loss we can place below this bullish candle, because what we're essentially doing in psychology is we're placing our stop loss below all of these buyers right here. Because remember, if I'm not taking the trade and you're not taking the trade, who's taking the trade right here? There's somebody taking this trade. So these guys are confident in taking the buy. So if we get in here, I feel confident maybe placing my stop loss below here where they bought in, plus maybe it's a higher time frame support. Maybe it's an hourly or daily support. And if it comes down and I get stopped out, that's, that's what trading is, guys. But over time, you can see that this strategy works and you get pips in your favor. And then as soon as you go up 10, 20, 30 pips, take your stop loss from down there, put it at break even, or put it right up here where on your next candle and secure 10 pips, or cash out partials as you go and continue to go with that momentum. That's the best strategy, and it works, guys. It's a real good strategy to compound pips and make money in your accounts. And it's safe, guys. It's safe. Okay. Remember, when you're trading, number one thing is protect your capital, protect your profits. That's it. And you'll become a very, very good trader. But you got to watch now what's going on. That's why we do, when I trade, I do play by play, candle by candle. And you see, I'm always placing resistance support lines at the 5-minute wicks, because I want to know what's going on. So if I take this bullish candle and it comes down here, I'm placing a support line right below this wick, because that's how low it got on this time frame. And I'm riding this momentum. And now, to answer your question, Michael, I'm looking left, bro. So once we engulf this wick, that would be if we got in on this bullish candle down here, that would be like a TP1 up here, this wick. I would be looking to scale out. Maybe that's a 10 pip move and then leave more. And then if we start approaching, this would be another take profit zone above this wick, because these were sellers. Now, if we're taking them out of the market, I want to collect my money on the way. And then if it continues to go up, higher highs, higher lows, we make more money. Okay. And we can always get into another buy. You can always add multiple orders. Okay. And we'll go over that strategy as well with multiple orders for you guys. Okay. So this is a reversal pattern. And it's good to identify these, but take from this a key downtrend, and it's reaching support at a higher time frame, guys. Okay, so remember, if we're trading 5-minute candles, we're looking for bullish engulfing candlesticks off of a downtrend near an hourly support, or even better, a daily support, or even a 4-hour support line. Then we can expect maybe a nice reversal of 10, 20, 30 pips or more. Okay, and if you're counter trading, if this is a big bearish downtrend and we're counter trading, you got to remember, if the counter trade is worth 1 or 2 or 3 green candles, you always got to expect in the back of your mind that sellers are going to come in and push this down. This could just be a pullback, resetting the RSI, and then it could be forming a lower high and sellers could come and push it down. But if you get in a nice scalp, 10, 20, 30 pips, take your profits, guys. Okay. And the pips add up. Believe me, they add up, guys. And your confidence builds. Okay. When you're trading, you want to build your confidence. Okay, so let's go to, this is the slide I just showed you. So we got a little bit of a downtrend. Okay, you can see we got a rejection wick. So bearish engulfing candles come down, another rejection wick coming down. This B level is a higher time frame support. So this could be like an hourly support level. We got a bullish engulfing candlestick print, and then we could take like a buy entry here, place our stop loss below here, and we ride these green candles to profits. Okay, and you can see the move. This is an example of GBP USD on 5 minutes. 137 is the price, and it goes up to 137.20. Okay, so you can see these 4 bars right here are 20 pips. If you get in right here, if you got in even lower down here, then you're looking at a bigger move. You're looking at 30 pips. Okay, and guys, if you got any questions in the chat, or let me know. Okay, so this is just how it's forming. Okay, so you can see here, we got a bullish engulfing pattern. You could take like a buy entry right here, place your stop loss down here, and then you're riding the momentum up on this candle. But this is what I'm going to go into with you guys. We went over the bullish engulfing candlestick right here. So from most bullish to least bullish, left to right. Okay, guys, this is how the grid work works. Okay, because this is all volume. Okay, so these are the candles you want to identify for buys on the left to the right, guys. So A is the bullish engulfing. If I can just get you guys to mute the mics, guys.
Something.
Let's see here. Okay, perfect, guys. So we have the bullish engulfing candlestick. Okay, the next one we're going to look at is the hammer candlestick, and this one is the one with the rejection wick. So I'll teach you guys what that rejection wick is. And then there's a harami candle. I talk about bullish pin bar candlesticks, and this is a spin top with indecision. And you can see the further we're going to the right, you can see that they're getting not as bullish as they are on the left, because they're losing the momentum, they're losing the buying volume. And then we have an inverted hammer candlestick, and then this doji, and then the dragonfly. Okay, so I'm going to start to break these down for you guys, and we're going to get into this stuff.
Ron,
Any questions, guys, before
yeah,
we
just a quick
continue?
question, please. Ron, can you hear me?
Okay, guys, so that was bullish engulfing, and I can flip to trading view, and I'll do that at the end, guys. Let's just get these candles out of the way, and then we'll take a look at how they're forming live. Okay, so this is the hammer. Okay, this is a really important candlestick too for reversal patterns. Okay, and it's our second most bullish candlestick. Okay, so this is how they form. Okay, so we've got a downtrend. I always love to find bullish candlesticks off of a downtrend. I don't like to trade consolidation. You guys probably know that. When I see consolidation, I box those candles in. I box that price action. And what I'm looking for is, you might see a bullish engulfing candlestick form inside consolidation. You might see a hammer form, but I'm not taking those trades. I'm looking for the bigger, the reversal ones. Like if I'm in a nice downtrend, I'm letting the downtrend come all the way down to maybe a higher time frame support. And then once I start to see these candles develop, that's when I'm looking for maybe a buy. Okay, so just got to be patient with it. So here we can see that we have a bearish engulfing candlestick. This one took out all these buyers, and then we have continuing to the downside. And this candle opened red right here. This hammer was actually red. It opened red right here, and it came down bearish all the way down here to where we have this green support level. This could be a hourly support or a daily support. And now it starts to get rejected. Okay, so it's getting rejected at this price at 135.96, and you see it getting rejected because this was a big red candle full. It looked like this, but now it's starting to create this wick. Now it's pushing up. So what that's doing is the buyers now are coming in at a support level, a higher time frame. Because remember, when we're scalping 5-minute candles, there's traders that are trading specifically hourly candles, and they sit on hourly candles until they look for their entry. So we're essentially, when we see these candles, we're buying with the hourly buyers. Okay, and if you see these at daily, you're buying with the daily buyers. Okay, and who are those daily buyers? Could be the banks, could be the market makers, right? So we want to trade with them. We're the small retail guys, but if we can watch what they're doing, it makes scalping easy. That's how we're hitting 50 pips, 100 pips, 200 pips per call. Like and we're not working magic, guys. We're just trading with price action at critical levels. Okay, so you see when we're taking a buy, what justifies it? It's coming down to an hourly daily support. I feel confident if I start to see a rejection wick coming up, but this could come up and sellers could push it right back down. So if you're trading 5-minute candles, remember, there's two ways to trade them. You can take the buy as the wick is forming up if you feel confident doing that. Okay, that takes maybe a few practice. Okay, so I wouldn't recommend that style for if you're new to trading. I would wait for this candle to close. Okay, remember, confirmation and retest is better than just taking an impulse trade. Believe me, your account will thank you for that. So all you're basically giving up is maybe 5-10 pips. Okay, but if you wait for this candle, you're still going to get profits, but not as much as, but this could be a dangerous trade. You take it here and sellers could push it right back down and it might hit your stop loss. Okay. You'll learn how to trade these wicks as you get better, and wicks are formed at levels of support and resistance. That's why the wicks are forming. They're getting rejected. This is a rejection. So it comes down, you have buyers pushing it all the way up, and then it goes above the volume. It opened here red, and now we flipped the candle. We flipped the momentum, okay, in this 5 minutes. Now we have buyers coming in, pushing it up. This was the where it opened. Now you have the buying volume going above the open, creating a new higher high on the candle. And this is what forms the hammer. That's what it looks like, a hammer. Okay, this is the head of the candle. That's where all the volume is. It's at the top of the candle. So we could expect continuation on our next candle. So this would be your confirmation entry right here. It continues right here. Small, look at the drawdown. Okay, so the sellers continue to push this down all the way down to here. Okay, but it creates a higher low from this green line, and then buyers step in again and start pushing it up, and then we go up here. So we engulf this red candle now. So these two candles, this hammer and this harami, basically took out these guys. So we still have all of these sellers in the market. So look at our next candle. Opens, small drawdown, respects the trend line, higher highs and higher lows, and we start going up. And then we almost engulf that entire red candle, and then we get a little bit more continuation to the upside. Okay, so this is like a hammer pattern. Okay, and I'll show you here. If there's any questions, guys, let me know in the chat, guys. Anwar, what's going on, bro? Let me just see. The harami candle I see often just before reversal. Is that common? Yes. So harami candle is a candle that gives you a clue that a reversal is happening. Good question, bro. And what harami means in Japanese is it's pregnant. Okay, I'll show you what that is when we get to the candle. What market makers do is they gap the candle up, and it opens inside the belly of the bearish candle, and it closes inside. But that's giving us an indication that there could be a reversal. It's not a good entry candle to take, but what it's telling you is it's giving you a clue that the trend is reversing, and then you're looking for your next candle to maybe be a bullish engulfing or like a rejection, a hammer candle. But the next candle I'm going to talk about right after hammer is going to be the bullish harami. But early clues, yeah. So that's what we're doing, guys. These candlesticks are telling you a story. It's telling you what happened in the past, telling you what's going on in the present, and what we need to do is predict the future. And you use these candlesticks. The Japanese invented these when they were trading rice in the 1800s, and they've stuck on our charts till now. So they're there for a reason. And believe me, Japanese people are very smart. They know what they're doing. So these, I didn't know what these candlesticks were when I started trading stocks. I was just buying a stock. I heard it was good, and I would buy it and hold it. I had no idea what the hell these candlesticks were. But once I started reading and teaching myself how these things work live, I'm like, wow, they're telling me a story. Like, they're telling us the price action. So when we understand that, and then we combine it with areas of support and resistance and patterns, then it's game over, guys. We just make our money. Okay, so this is going to be the hammer candlestick. Okay, so this is a good screen I want to show you guys. Okay, a hammer is a reversal pattern. Okay, it's a technical chart pattern. It's a rejection candle. Why is it a rejection candle? Because we're rejecting the sellers, and it's got this long lower wick that's telling us that buyers are stepping into the market. And what makes a hammer more powerful is the wick needs to be 2 to 3 times the size of the body. Okay, so you can see this wick is 2 to 3 times the size of the body. Okay, so that's showing us that it's a heavy rejection. If you guys were on the FOMC call today with Dave at 2 p.m., when gold dumped the head fake candle at 2 p.m., they dumped it bearish. But then did you see the rejection wick that formed? It was so long. That means that buyers were stepping in and pushing that all the way up. That's when I took the entry right off the hammer candle that rejected. I took a 1 lot entry, and then as it broke the high of the previous candle, I entered into a second 1 lot entry, and I took it for, I think it was 40, 45 pips, 50 pips each trade. It was for almost $1,000, and I exited and that's what I just used. I read that it was a long rejection wick. It went above the previous candle, and I took it, and I didn't get greedy because I know how to trade FOMC, because what goes up can come right back down. So make $1,000 in a few minutes, guys. You know, you can't ask for more than that. Aaron made 3K on that so he got in, got out, made his money, because it's very, very volatile, guys. Okay, and a lot of you guys made some money on that. So that's a very volatile session, guys. So if you're making money on those types of volatile sessions, when we trade tonight Tokyo, like London and things like that, New York, then it gets easier, guys, because there's not so much volatility. And then they follow technical trading. Okay, so that's why we want to teach you guys technicals. Okay. So this is the hammer candlestick. Remember, I'm looking for a downtrend. Okay, this is when they're more powerful, is on a downtrend, not during consolidation. If you see candlesticks trading sideways, box them in and don't trade that. Believe me, guys, believe me. I made a living off of this. Don't trade that shit. Wait for this type of setup. Wait for a downtrend, because you know it's going to get exhausted at some point. And if you have your higher time frame support set up at hourly, daily, 4-hour support levels, and then you start to see maybe 3-4 red candles coming down, you have your RSI indicator, maybe we're starting to get oversold territory. Remember, don't take entries just because RSI hits 30 or close to that. Look for your candlesticks, okay? But use that as confluence. Okay, we're reaching maybe 30 on RSI. We're reaching maybe an hourly, daily support. Now I'm looking for a clue candle to maybe get me in for a buy entry or a reversal. And then if you start to see this form, okay, so this candle was red, it continued. This was 1, 2, 3, 4. This was the 5th red candle that opened here, and it came all the way down. This was a bearish candle coming down, but then it came to this level. For example, it's a higher time frame support. We start getting rejected. This could give you a clue now that buyers are stepping into the market, and it forms into a hammer candle where the volume now goes above the open and it closes up here bullish. Okay, so this is a hammer candle. And then this is now your continuation confirmation retest candle. So if we have drawdown now, the wick, we identify where the wick is. If it makes a higher low support, we can now start to draw like a trend line, and we see now the momentum continuing. And first area that we're looking to take profits is these 2 wicks. Okay, and we get it on this candle. You could scale out right there. Next candle could come down, a little bit more of a pullback. Buyers step in, more liquidity, buyers get in and continue to take it up, and we could look for profits on this candle and that candle. And then if we break all these candles, then it's a higher high, guys. We've done a full trend reversal from bearish to bullish. Then we could look for continued upside. Okay, and then what we could do is we break a new higher high. It could come down and test. Now if we break a critical resistance, like for example, if we broke now an hourly resistance or daily, this is where we get those pips continuing to run and those big bullish candles. And then it might come down to test now for support, and that could be like another pullback by entry if we get in there and we ride it up. But if you leave a partial runner, that's where you can eat off that runner. You can continue to grab pips. But on the initial plays, guys, when you're scalping 10, 20, 30 pips, me personally, I'm always taking 70, 80% off the table. Okay, I know how scalping works, guys. Sometimes you go up 10, 20, 30 pips, and if you think it's going to go up more, you might get bit, guys. You might get, market makers might throw one bearish candle right at you and wash you right out, right to where you bought back in. Okay, and when that happens, we think about it. When it went up 10, 20, 30 pips, you could have cashed out a position. And then when the market makers bring it back down at the level of support, you could enter into another buy and you can grab another 10, 20 pips. But in the meantime, you collected your money there and we can look for another trade. Remember, the goal of this is to grow your account, guys. Anytime you guys are in profitable trades, look to scale out. Okay, it will build your confidence, it will build your account, and it will make you that much better of a trader, more of a patient, clean, consistent trader, guys. You won't be. I've believe me, I've had reckless traders. It's you don't want to be a reckless trader, guys. Okay, because these do not always just continue to go up, guys. This is the Forex market. Okay, these are not pump and dump stocks. Like if you're trading AMC and GameStop and all that bullshit that goes on in the stock market. Okay, this is Forex. This is trillions of dollars going through the markets. Banks are trading. Okay, so the only one in the middle is the middleman, the market maker, the brokers. They're the ones that are trying to collect a little bit of extra money on the side. Okay, but banks are not going to just continue to pull this up unless there's news behind it, okay, to justify that. But in the meantime, you'll see it range. It might range in, that's why I'm always looking for a range. If I see gold like tonight in a 30 pip range, $3 range, that's all we can scalp. That's all we can get. We can get maybe 30 pips going up, 30 pips coming down. But if we have the major breakouts at the daily or at the daily resistance or support, that's when we can start moving up, guys. That's why I always chart top down, daily, hourly, 5 minutes. And you guys are going to start to understand that, guys. So this is a nice reversal pattern. This is our second most bullish pattern. Bullish engulfing is number 1, and this is number 2, guys. So do you guys have any questions on the hammer candle? Okay, so this is kind of how it looks like on our chart. You got a downtrend coming to a higher time frame support. You got a rejection wick. If you feel confident, guys, when you get really good at sniping, you could take the buy down here, place your stop loss below these previous candles down here. And if you're below like a daily support, that's even better, because you're backed up by daily buyers. And then you take this candle up. You see it's a hammer candle. See the continuation. You could continue to ride it up. We start to engulf a red candle, to maybe grab some profits off there, maybe if it's like 10 initial pips, and then you could continue to run it, guys. And then take your stop loss from down here, put it at wherever you bought in at break even. And then in the trade, as it goes up, this is another strategy, guys. As the candle is going up and it closes, and then you get another candle, what you can do is from here, you take your stop loss, place it below there. Okay, that might be like a break even or 5 pip move. But then if you start to see 1 or 2 candles continue to move up, take your stop loss, place it below this candle. If you see like the price action is all the way up here, take your stop loss and place it below this candle, and then 50% of this candle. And then as it continues to go up, just drag your stop loss. If you guys are trading on MT4 on your desktop, just, you got like, it's kind of like a horizontal line. You can have your buy entry and you just continue to move it up with the trade. Okay, it doesn't get any easier than that, guys. And then if it comes down and taps you out, big deal. But you made 10, 20, 30, 40, 50 pips on the way up. Okay. Okay, so that's gonna clean up now. Okay, so what I want to show you is right here, guys. Okay, so look, this is the downtrend. Okay, see how it's a red candle coming down? It's a bearish candle coming down, but watch how it flips now. So this could be in the 5 minutes. Let's say it's counting down 4 minutes, 3 minutes, 2 minutes. It's getting near the close of the candle, and then you have a momentum flip. So look at how the candle now will flip. Comes down bearish. Let's say this is a higher time frame support level right here. There's the flip. Did you guys see that? Okay, so as it came down, we reached support. Now buyers step in and take it up. Okay, and then if the momentum is near the end of the candle, like the last 30 seconds, last minute of the 5-minute candle, the momentum is with the buyers. Okay, and we could expect initial buy here, maybe small pullback, because you got to remember, what is a pullback, guys? So when you have a bullish, because guys ask me this all the time, if we have a bullish candle or we have a bullish engulfing candle, why is there drawdown? Why are we not continuing to move? That's a great question, guys ask. What it is you got to look left. Remember, this was a big bearish engulfing candle that took out these guys, and then we had continued bearish momentum, more sellers, and then this candle was sellers coming down. So all that this hammer candle did was take out the body of these sellers and a little bit of this candle right here, and that's where the hammer candle finishes. So there is still all of this selling momentum still coming down. Okay, so if there's sellers, like, remember, these guys they hit the sell button up here, and let's say me and you hit the sell button. We want this to continue selling. So what could happen is they place more sell orders right here. They continue to hit the sell button because they want to take buyers out of the market and take this hammer candle down and push it down further. So that's what drawdown is. This candle could open green, flash green, and then these sellers are continuing to place sell orders in and have more sell orders than there is buyers, and then they take the candle down. But what we're watching for, that's the pullback. We're looking for buyers to step in and create a wick at a support level higher than this support right here. Therefore, we have a higher low support, and then we're looking for continuation wick, get above our hammer, and then take out these guys. We got to go candle by candle. We can't look all the way up here if we haven't taken out these sellers out of the market yet. Okay, hopefully you guys understand that. And then once we take out these guys, then if we take out all of this, that could be like TP1, TP2, our next take profit will be this wick right up here, and then we go continue to look left. Okay, so now we have the bullish candle print, hammer, and then let's see the next candle, how they open it. Okay, so look what happened there. Okay, did you see that? How it flashed? So it flashed red. That was where it came down. Okay, that's what I was just talking about. It came down because there was still some selling pressure from these guys right here. So it came down. You can't be scared about that. Okay, so even if a candle flashes red, you got to trust your technicals. You got to trust where you bought in, trust your stop loss, trust your higher low support, and then they flip it and then the candle turns green. Now this hammer body and this candle right here, we've engulfed these guys. Okay, so our next candle, again, it opened, went down red a little bit. We pick up a higher low support from here and here. Now we're forming an uptrend. You can draw a trend line, and now this candle continues to go up, and we try and engulf this candle. We originally did, we engulfed this candle right up here. That was the high of the time frame, but we never closed up there. There was still some selling pressure and they closed right here. So now what we got to do is wait for our next candle and see how it goes. But in the meantime, you could be dragging your profit take all the way up to maybe this candle right here, if you like, or halfway, depending on which profits you're happy with. Okay. And then here's our next candle. Look at that. Okay. So did you see how it opened? Ignited. See how we have no drawdown, no wick? This is a ignited candle. It's just a continuation bullish candle, and it came all the way up here. But now we're starting to get a rejection wick from the top. Okay. So these are now sellers pushing it down. We could be reaching maybe a higher time frame resistance up here. And we got a 1, 2, 3, 4 candle reversal. But now we got to watch the momentum on our next candle, as long as it's, because this wick created a higher high and we still have all higher low support. So we'll see, can this continue to run, or are sellers going to push it down? Okay, so did you see that candle? So it flashed red and it went up a little bit more. Okay, so you can continue with the profits, but you can't be scared if a candle just flashes red and comes down a little bit. Okay, because I know a lot of guys, they get scared, they panic, they take their profits, and then it continues to run 10, 20, 30 more pips in their original direction that they had. So but it comes with practice, guys. Okay, so is there any questions on that? So we've done bullish engulfing, we've done the hammer. Let me know, guys. Okay, because if you guys got questions, this is the time to ask. Okay, and I can really get in depth with it, guys. And no questions are bad questions, guys. Okay, we're all here to learn, guys. Believe me, this is a supporting environment, guys. We're all one team, we're all one family. We're all here for one reason, is to learn how to trade and make some money, guys. Okay, believe me. And if you have a question, I guarantee you the 10 other guys on the call have that same question. Okay. Okay, so we just did hammer, now bullish harami. Okay, so this is our third candle in order from bullish to least bearish. A harami candlestick is in the middle. Okay, so remember what I told you what harami means. It means pregnant in Japanese. Okay, because the candle body opens and closes inside the belly of the red bearish candle. Okay, so let me show you this. So you have now the downtrend, 1, 2, 3 bearish candles coming all the way down to a level of higher time frame support. And now look at what the market makers do. See where this red candle closes at support? Why does this candle open up here? Well, there's got to be a reason for that. Like this doesn't just happen with magic. Market makers are gapping it up on purpose because they're trying to entice buyers to come in so that they can continue to reverse this trend. It's kind of, this is giving us a clue, but it's not enough to give us a buy entry. Okay, so we got to watch how this candle, we can see it open, clearly see it gap up, and now we got to watch how it closes. So it came all the way up here. See where I have the red line? That was the high, 1867.43, and then it comes down and it closes. So look at how the candle closes. It opened inside the belly of the red candle and it closes inside. So that's why the Japanese call it harami, pregnant. This is like a pregnant lady. This is her body, this is her belly, this is the baby. Okay, so now look at what they do with the next candle. They gap it up again. Look at where this candle closed and look at where they gap it up. Okay, they're gapping it up for a reason. They're trying to artificially move the price up, okay? Because there's tons of selling pressure coming down. So they need to make up for all that selling pressure by gapping up the candles, okay? To make some higher lows. And what it is, then you have this red candle come down, but you got harami candle formed, you got higher low support. And then you can, once we break this was previous wick resistance. This is where I would box these candles in right here. I wouldn't trade any of this. I would look for the breakout candle right here to trade. So this is like the area of consolidation. I got a harami candle forming. I got a clue that we're going to reverse and start to go bullish. But when? I can start to see it maybe on this candle. Look at what they do here. Look at where this candle closed. Look at where my resistance line was, this wick, and look at how they gap it up above the resistance line, okay? They gapped it up above the resistance line. So, and then it's an ignited candle and it goes straight up, okay? So maybe I would have my buy entry in here. I would place my stop loss. You could place it below the harami candle or below the green line where you have higher time frame support. And then you get this nice green bullish candlestick. We look left, see how much we've engulfed on these red guys and how much further we can go to the upside. You have a little pause, pullback candle right here. This is a 3-bar pattern, guys. This is, you have a really nice bullish engulfing candlestick. Then this is called a pause candle. It's kind of a consolidation candle within a nice trend. They pause it. Watch the wick, guys. Higher low, continues to go up. Then we have this next candle, engulf these guys, and we could continue to go up further, okay? So this is a harami giving us a clue, and you see how they open it and close it inside the belly of a bearish candle. A lot of people don't look at this, but me, when I'm trading, you guys probably see I zoom in on candles, bar by bar, candle by candle. You can see that I'm looking for where they're opening, where they're closing. Okay, I know a lot of people don't trade like that, but me personally, these candles are there for a reason. You know, they're named for a reason, and what they are is they're clue candles. Okay, so if you can spot these, you can make money. Okay, and then the opposite is the bearish harami. Okay, and we'll do that next week in next week's webinar when we introduce the bearish family. Okay, so that's the harami candle. Is there any questions on that? So we've done bullish engulfing, we've done hammer, bullish harami. Let's see what's next. Next we have, I believe it's the pin bar. Okay, so here's the pin bar candle. So now we're starting to move to the right spectrum where they're starting to get least bullish. Okay, we did our most bullish. Those are the ones. If you can take something from this, make sure you can identify and trade a bullish engulfing and a hammer candlestick. Okay, and then these other ones are when you learn more about candlesticks and price action and movement, you'll start to learn what a pin bar and like a spinning top candle is. Okay, so this is a bullish pin bar candlestick. On this trend, okay, so this is a consolidation area. See, what I would do is I would box these candles in. This is a fake breakout. See how they break it out? This is an impulse candle breaking out, but then look what happens. Next candle is red bearish, and then they bring it right back down. So this candle could be an impulse buy. So again, guys, when I tell you about impulse buys, because there is traders that like to take those, the buy was right here, impulse breaking out at 135.55. And then it goes up to here. So that's all you get. And it goes up to 135.65. So that's a 10 pip move. Okay. So if you're not taking your profits on an impulse candle up to 10 pips, then what happens is you could come right back down to where you bought in. And then look, it comes down, could have triggered your stop loss if you had it placed right there. And then you would have lost 10 pips and now been at a loss of, you lost 10 pip profit. And now you lost 10 pips of your own money. Okay. So that's why you got to understand when to trade impulse candles. That's why I use RSI for like a 50 break. That's where's the momentum? Is it still in bearish territory? Is it above 50? Can I get a nice break and anticipate a nice move? So that's what you got to look at. That was a fake out, and then it's continuing to come down, but then we get a rejection wick coming up. Okay. So another thing I failed to mention, guys, hammer candlesticks can have a red or green body. Okay. It doesn't, but if you have a green body, remember that's buying volume. Okay. They're hitting the asking price. They want to get in. If you have a red body, it's still bullish, but it's more they're hitting the bid. Okay. They're cheap. You know what I mean? They're hitting the bid. They're trying to get in cheap. But when you have a green body, they're hitting the asking price. They don't care what it is. They're hitting the asking price. You know when they say slap that ask, that's what it is. They're slapping that ass, not ass. They're slapping the ask. Okay. And that's where you get a nice green momentum. Okay. But hammer candlesticks can be red, but they're just not as powerful, guys. Okay. So remember that these guys are cheap. They're hitting the bid. They want to get in, but they want to get in cheaply. Okay. So they're trying to get in at the low. They're trying to hit the bid. When you're trading stocks, you'll see that the bid and the ask. Okay. Same with Forex. And then what the spread is, it's what is the difference between the bid and the ask. That's what the spread is. That's where the broker is making their money. Okay. On top of commissions. So when you trade, you got to also know what your spread is when you're trading, guys. You got to factor that into your trades. Okay, it's very important that you guys learn that. And then look, now we're not breaking. Here's our red resistance line. And then look at this candle, okay? So now we get a long rejection wick. We get another rejection wick. We're starting to build momentum, okay? Momentum at a higher time frame support down here. And we break, but then look at where they close it. They close it right below that red line. So this is a bullish pin bar candlestick. The body is above 50% of the candle wick, and it's 3/4 up here. It's small thin body, but it's giving us a clue that buyers are stepping in. Big rejection. It broke through an area of resistance, but still had selling pressure. Sellers pushed it right back down, and it closed right below the red line. So what we need is continuation. We get it open here, small drawdown. I would be taking a buy entry in here, because number one, we had a fake out, which caught, these buyers thought this was going to run right here, okay? And it didn't. It failed. So it was a failed breakout. But what we have now is a second attempt. On this sell-off, we have now buying pressure on this, buying pressure here, buying pressure come up here, close. And then this one is a really nice rejection candle, come all the way up. We broke, we pierced through it, but then we closed with the volume right here. So this would be our next candle. It's nice, looks full, open it up here. Small drawdown, small wick. So as it's coming up, you could take your buy entry here, or you could take your buy entry once you clear these wicks right there. You could take a buy there, take your stop loss, place it below either this wick, but as long as you're below this green line support, you're good. But what I do is I place it below a previous 5-minute candlestick, okay? Because I want to be with these buyers, okay? I don't want to just get tapped out and then it continues to run. But then look at this large momentum, okay? This is a money candle. This could be a 10, 20 pip candle. And we could get continuation off of this, okay? And then all we're doing is looking left. Remember the failed breakout? We cleared that area. Now it's nothing but upside, nothing but money, guys, okay? So you see how these candles, how they form, and what got us there, okay? So that's what a bullish pin bar is. Is there any questions on that? And then now I'm going to move to a spin top candle, which is indecision. So now we're starting to go into more neutral candles, but they give us clues that we could be changing a trend, okay? So this is our bullish pin bar, guys. Sorry, bullish spin top, okay? So what a bullish spin top is, it's a neutral candle, 50-50 candle, okay? So on this downtrend, it came all the way down. We reached a level of, this was a bearish candle, come all the way down, break below a critical support level, could be hourly, daily, and then we have a nice rejection where buyers take it back up to here, and then still has selling pressure from these candles where they push it down and they close it. You can see the open and close are virtually identical, okay? So this had a long range where price action made a low down here and a high up here, but it closed basically where it opened, okay? And this is, and it's got a thin body. It's got a thin green body, therefore it's still considered to be a little bit bullish neutral candle. But this is not enough for us to take a trade. This is giving us a clue that sellers could be getting exhausted and buyers are stepping in. So we need to wait for additional candle confirmation. And then this next candle shows us that we've got continuation with small drawdown, not very much drawdown. And as soon as this candle starts to break above the spin top wick and we engulf this red candle, then look how high it went. It went all the way up to here. Sellers pushed it back down, but this candle body engulfed almost these two candles. So we could expect a little bit more upside. Remember what wick fills are, guys, okay? So continuation to fill this previous wick right here. We get it on this candle and a little bit more to the upside, okay? So this 3 bars, 1, 2, 3, started with this spin top candle. That's what started it all, okay? And you can see here, here's like a small spin top considered to be like a doji candle. You see right here was one, it closed with the red body, came back down, retested here, and then that started that trend right there. Again, sellers push it down, then we get a more powerful spin top candle. See where it came down? It came down here, it grabbed more liquidity, grabbed more buyers underneath the higher time frame support, and we push up again, okay? And if you don't take your profits, guys, look what can happen. It could come basically almost right back down to where you bought in, okay? And then if the trend is still moving, you have bullish engulfing candle, could move, and then this could continue to move up. But if you're scalping, guys, and you grab this candle right here, and you get in 10, 20, 30 pips, guys, scale out a little bit, okay, and leave a small partial runner with break even. Arthur, is that an impulse candle? This one right here, this spin tops are not impulse candles, okay? It could be an impulse candle where it's breaking out, but when it finishes and closes, it closes with a neutral. No one has control, no buyers or sellers. It's just telling you that there's indecision in the market or the time frame you're trading, and anyone can take it from there. Could be buyers or sellers, okay? It's like a tug of war. It's just 50-50. No one is one, okay? We need to get more confirmation of volume in bodies. We're looking for bullish engulfing, okay, to continue this. And we start to get it with this candle, okay? So these are spin top candles. These are indecision, neutral candles. If you start to see these forming like multiple spin top candles, what you do, guys, is box those in. There's absolutely no direction. There's nothing to take a trade on, because you want to be a buyer or seller. They don't even know where they're moving it. It's just a period of where price is just trading sideways, and then set up your charts how we do. We wait for the breakouts or the breakdowns, and that's where you can get your money, okay? So after that is just the Doji candle. I'll go over Doji real quick. They're not really important, these Doji candles. Oh, this one, inverted hammer. I don't want to miss this one, okay? So this is the inverted hammer. So this is what this is basically, it's a hammer upside down, okay? But it's not, it's more to the bearish side of the bullish family. It's near the end, okay? This is right before the Doji candle. So the inverted hammer, again, we have a downtrend. We come down. So what this inverted hammer was it opened right here. This was a bullish candle. It was really green and bullish. It came all the way up to here. We tried to engulf all of this, but near the end of the candle, we still have selling pressure, and they push it down and they close it right here, but we still have bullish body above a level of support. But this was a really nice bullish candle, but we're still encountering selling pressure, and you can see how large the selling pressure was. Look at this long rejection wick and continuing to come down, but this is giving us now a clue that buyers stepped in. They tried to push the price up, but they got pushed down. We closed with a little bit of bullish volume still in there. There were still some buyers, and then we look for our next candle to maybe fill that wick and continue the trend, okay? So you can see that the next candle opens, we almost have a complete wick fill, and you can take like a buy here or buy down here, stop loss placed below there, and then you could ride this momentum. You have a little indecision and continue in the momentum, and it continues to go up, okay? So these are how reversal patterns start, and you got to start to identify these candles. But when they're formed at levels of support and resistance, support on a higher time frame, okay, and especially on a nice downtrend, because you're expecting a little reversal where we can grab 10, 20, 30 pips, okay? So that's an inverted hammer, guys. And then wicks tell you everything, guys. Like, wicks are very, very important, especially when they're getting rejected at the support and resistance levels, okay? Then we can expect maybe a nice reversal, okay? So we've done basically the bullish family. The Doji candle I can go over real quick. It's not that important, guys. A Doji candle is just a small range candle. There's very, very little volume on it, okay? So this is what it kind of looks like. See this? This is all consolidation. See all these garbage candles? This is, if you identify this, don't trade this, okay? What you do is you just identify it and you look for a buy to break out up here, or you look for a sell to break down here. See how it's starting here? We get an initial break, body close. This candle comes up, makes a lower high, push down. Now the volume is below our green line. Here's a retest. We could take maybe possibly get into a sell here, place our stop loss up here, and we could ride this momentum. As long as these candles continue to break the lows of these candles, and then we would look left for previous price action, then we can collect some money to the downside. But these are Doji candles, okay? They're very small range, thin. They got no volume, very thin. It's just they're trading sideways, okay? They could be giving you clues that trends are changing. Like if you see daily dojis, these are more important. If you see a nice big bullish daily candle, and then the second day it's a small doji candle above, that's kind of like a star telling you that it could be an evening star pattern. And then if your third day is now like starting to be a bearish candle, then that could be the bullish candle going up. You have an evening star forming at the top, and then we could expect that the third day, the probability is going to be a bearish day coming down. And then also the morning star pattern is the opposite. It's the bullish pattern where you have a bearish candle coming down, you have a doji candle in the middle, and that's kind of like the sun coming up. That's what the Japanese say. That's the morning star pattern. It's the sun coming over the horizon. It's giving you like some hope in the market. And then your third day will be a bullish engulfing candle. If you watch the tutorial on the 3-bar candlestick patterns, guys, those are the morning star pattern, then you'll start to see that these things now combined with other candlesticks form patterns. Okay, so the 2-bar pattern is the piercing line pattern. That's like the bullish engulfing, but with 2 candles, where it cannot be done with 1 candle. Okay, so review those in your tutorials, guys. It's good information. So what time we got here? It's 8 o'clock, guys. Let's take a look at our trading view charts, so we can take a look at maybe some like live candles being formed. Okay. And guys, this is now open floor. If you guys got questions, this is the time. It doesn't have to be all about bullish candlesticks. It can be about anything. If you got anything trading related, we'll go about 30 more minutes, guys. The floor is yours if you guys got any questions. If not, I can just show you some like patterns here where I would look for like buys and things like that. Okay, so this was the FOMO right here at 2 o'clock. Okay. If you see here, this is when Dave was trading it. See when they opened it at 2 p.m. right here? They opened it and it came all the way down here, but look at the long rejection wick. This is when I bought, and then there's small drawdown. Then you got this bullish candlestick, engulf everything. This candle came all the way up to here, okay? But then it started coming down. That's when I took my profits because I didn't want to get caught where it came all the way back down. Then you had another opportunity to get into another buy on this wick, coming down, make a higher low from here, continue to engulf these candles, and then it continued to run up, okay? And then that's what started this nice little uptrend on gold, okay? And that was a big move. Okay, so I'm trying to show you like where you would want to identify, okay? So look at here, this pattern, okay? So like right here, if you're getting these small range candles, okay? If you're trading, guys, anytime you're trading and you see this type of candles right here, okay? There's all types of candles. Guys, just be smart. Just box these in, okay? You can box the bodies or the wicks, whatever you prefer, okay? Box those in, okay? And just remain patient because we know that there's going to be a move to the upside or to the downside. It's not going to trade sideways forever, okay? And then what we're looking for is this candle right here, okay? See the spin top candle? So this was the one with indecision. Why was it indecision? Because we opened bearish, we broke down there. We have a long rejection wick where buyers stepped in, pushed it back up. We had the impulse breakout there, but then the body closed right there, closed with indecision. But you can see the range went up and down and we broke a high and a low. So next candle will possibly have the volume to take it where it's got to go. So it starts to break up here. This could be the impulse breakout candle. As soon as it starts breaking above these wicks, you see the continuation come all the way up here. But then it encounters that selling pressure. They push it down, close it here, but the volume closed above this consolidation, accumulation, distribution box. And then we're looking for continuation. This could be the retest confirmation candle. We give it some time. It opens. There's no drawdown. And then it starts filling in the wick. So get into a buy here and ride the momentum. Okay. And then you get additional candles. Okay, so you get 1790. Let's see the buy right here. Like around here, when we break out 1799. If you get in the buy right there at 1799.30, look at the momentum straight up, higher highs and higher lows to 1804. That's like a nice 40-50 pip move right there. Okay, and then this is your pullback. Okay, it's pulling back. Sellers, little bit more momentum, makes a lower high, then sellers come in, bearish engulfing, continue. But now we find, look at this, bullish engulfing, okay? So we draw our support line right there. What do we got here? This is a downtrend, okay? A pullback, but it's coming off of this big bullish momentum. So this could be the higher low that we're looking for to add another entry here. If you guys, can I just get you guys please to mute the chat, guys?
Is he?
1 second.
That's her brother.
Can I get you guys just to mute your mics, please?
Did he recognize you?
Yeah. Yeah. I was like, Wyatt!
Okay, sorry guys. Okay, so look what happens here, okay? So it reaches a level of support, and what do we have? We have the bullish engulfing candlestick off of a little bit of a downtrend, okay? So if I add RSI on my chart now, what's RSI doing? Let's take a look. Okay, look at the RSI. We got overextended. Look, it went up to 80 on that big push. So you got to expect a little bit of a pullback, okay? And where does it come down to, guys? I'm not making this up, but you guys know I use 50 on my chart right there. Look at what it tapped. Came down to 50 and it bounced, came back, okay, right off of that bullish engulfing candle. There's a little pause candle in the middle, okay, but it still created higher low right there. And then we continue with a bullish engulfing candlestick, and there we go, guys. Ride the momentum, okay? So do you see how now RSI combined with price action, how it really works? And when you're looking for areas to take your buys and sells, like when you see garbage like this, just set up your charts, guys, relax, and let the trade come to you, and it will come to you. And you get in properly, place your stop loss accordingly. And if you wanted, like if you're, I know traders that scalp 5 minutes and they hold, they got they got balls of steel. They hold, like they won't even cash out here. They'll hold, they'll play the pullback. And what they do is, I know a lot of traders that will add multiple buys in here and continue to run it. Okay. If you feel confident doing that and you know what the overall trend is, the news that they dropped at that time to cause that, then trade like that. But if you prefer taking pips up here, and then what I do is, like, I like to scalp the entire market. I like to scalp this, get 20, 30, 40 pips. I like to scalp the pullback. I like to maybe enter into another buy here and play that. Everybody's different. Okay, but do you understand what I'm saying? We have the breakout right there. We've got bullish engulfing candlesticks forming at levels of support, and the RSI cools off from 80. And where does it come down to? Our psychological 50, and we bounce off of it. And momentum is still, strength is above 50, so that gives us the momentum to continue moving up. Okay, and then look, guys, another thing, bearish divergence. Okay, up here to here, price action is moving higher high, higher low, but look at the strength. Okay, from here to there. Okay, so we could start to now identify the high wicks right there. Okay, and what do we get? We get indecision candles forming. Okay, so now the buyers and sellers, every time the buyers push it up, sellers are pushing it down. And now look at the volume, guys. Okay, this is huge. Look at the volume of the candles. They're thinning out. Okay, so the buyers are losing. They're getting out of the market. What they're doing is they're cashing out. Okay, how would you not want to cash out when you go up 100 pips? Okay, especially scalping. So we probably have now profit taking. So we've identified now bearish divergence, where we have price action making higher highs, higher lows. Look at the RSI is coming down. What we do, guys, we get into a sell opportunity. Okay, so we'll find what is the support of these candles right there. Okay, box that in. Don't play this garbage shit candles right here. Box that in. Okay, and look for your opportunity. Opportunity is right here. Okay, see how this candle comes? It breaks down, impulse breakdown, but the body closes below our consolidation box. Here's a retest candle. If you do get into a sell, guys, it's not going to be a perfect sell. Everything's not going to just work out perfect when you're trading. But if you take a sell, you have to place your stop loss like above those wicks. Okay, and then you got to go with your trade. So there could be a pullback coming back into your red zone, but for the most part, you watch your candles. If buyers try to pull it back up, you have a bearish candle come down. It takes a couple candles, but once you start now breaking support levels, then it just starts really breaking down. Okay, then you could come down to here and take profits. Okay, and that would be a nice scalp right there. Okay, so if you take your sell entry at 1806 right there, 1806.50, price action came down to 1805. Okay, so you're looking at 15 pips right there. Here's a small pullback. Follow your pullbacks. Okay, look at the pullback. This was previous resistance. It pulls back, but it's still, sorry guys, it's still lower than the initial one up here. And then what do you have? You have a bearish engulfing candlestick come down, take out all of this, break level support, continue to drop. Okay, so, and that was all identified by looking at the divergence. Okay, so this is where you can step up your game trading, combine it with some indicators, combine it with your price action trading, and you can scalp the markets, guys. So is there any questions on that? Okay, I don't want to go too much like onto other stuff. I just want to keep it with the bullish engulfing, because I know there's a lot of new traders that are just learning about candlesticks. And tomorrow, guys, 7 p.m. same time, I'm going to do another Zoom with you guys, but I'm going to do what I did last week. So if you guys missed it, join tomorrow. For the guys that were on it, I'm just going to review again, introduction to candlesticks, the open, high, low, close, and the different time frames, just so we can have these videos saved and uploaded on our website, because that one I recorded halfway through when we were already doing it. So I want to have one completely done for you guys. So that will be tomorrow. Do you guys have any questions about the bullish family, about the support level?
Ron?
Yeah.
Hey.
What's going on, man?
Hey, sorry. My mic wasn't working for a second.
Yeah, no worries.
Ask you, you know, like today was like that, you said high impact news.
Yep.
What's really interesting when you enter, the spreads are so massive, even with Fusion, like yourself.
Did you see that?
Fusion,
yeah.
At one point it was 5 pips on gold. Like it was huge.
Yeah, because
my question to you was, why is the broker doing that? Is it because of the fact that, is it because they're just trying to get their rate, and they're just trying to get, like, they don't know where the price is going, so they're just kind of guessing where their buy and sell will be?
Yeah, you got it, bro. So what it is they know they know the calendar more than anybody. Okay, they know, because think about it. If me and you were brokers, we want to know where's the volatility in the market, because where are we going to make our money? Okay, so if there's volatility in the markets, and like, look at today, I made $1,000 in 5 minutes of trading. Okay. They know that there's going to be a big direction on these movements. Okay. And what the market makers try to do is they head fake you. Number one is they want to fake you out. Okay. But if you just remain patient and you see the direction, like here it is today, here's 2 o'clock. If you see what they did was, I don't know if it was so much on gold, but when Dave was doing, I believe US 30 and NAS 100, that was more fake outs. Gold was pretty good. I found it pretty good. But what they did was, we use Fusion as our brokers. They always have really, really good spreads. It's normally under 1 pip. It's like, but during this time, yeah, they increased it because they know that there's a lot of traders that are trading these volatile sessions. So they want to make it worthwhile. If people are trading it, that the broker's getting paid their money, their spread. Okay. So, and then also always during volatile sessions, you'll see it during session opens. When you trade London, leading into London, Fusion will have a nice spread. But then as soon as London opens up, they increase it, because that's where the influx of volume is, because news drops, markets open, banks are trading. So retail traders with brokers, we're trading. So obviously the broker wants to make their spread, so they increase it. New York session, when they open, you see the spreads increase. And just times when it's not good trading, then you'll see the spreads also. Like if you're trading 5, 6 p.m., 7 p.m. Eastern time, I never trade that time because of the spreads. They're horrible, and you're never going to get really nice movements there. So it's no point in trading at that time. But that's exactly what it is. It could be that they want to have margin. Okay. They want to, if you're taking the trade, they know that it's volatile. Like they know that the moves are going to be 50 to 100 pips. So why are they going to give you a nice, easy 1 pip spread for me to make 90 pips? Like today they made it difficult, but I still grabbed 45, 50 pips on the trades. I took 2 standard lots, and it went from, I posted it, but it would have been a lot more if the spread was more nicer to me. But I knew that there's going to be volatility. I bought this wick right here, and then I took it up to 1800, right? Where was it? No, let me see. No, it was here, 210. I bought this bullish engulfing candlestick. I waited with Dave to see what the market was going to do, and I took this trade. I believe it was 1796, and I took it to 1800 when we broke above here. I should have held it a little longer, but I didn't want to get greedy. That was good enough. But yeah, so to answer your question, the spreads, you guys always got to watch your spreads, guys. Don't just take trades, hit the buy and sell button. Understand, if you're with a broker, because we're all with different brokers. I use Fusion. Someone uses Hugo's Way, Legacy FX, other brokers. Get to know the normal spreads of your brokers, whatever you're trading, whether it's US 30, NAS, gold, GBP, USD. Get to know what their normal spreads are, and then look at what it is during volatile sessions, how much they change. Is it worthwhile for you to take those trades during volatile sessions, or is it better to just relax? That's the best way I can do it, because our broker fusion is really, really good, but I seen today that they changed it right during this FOMC announcement. So, but it was still good.
The thing is, Ron,
Yeah.
I don't know why we're trading. We should just open up a stock, a brokerage firm.
That's what
That's where the money is at.
Exactly,
These guys make money all the time.
All the time. That's what Dave and I have planned for the future. That's why we want to make you guys amazing traders, because we want to open something up like Funding Talent, but we want to do it our own way, where you guys are amazing traders, and we want to open up like a firm where we can fund you guys, give you guys $1,000, $5,000, $10,000, and when you guys get really good, that's what these guys are doing at Funding Talent. I don't know if you guys know how it works, but they're copying, like Blair, okay, who's in our group. He's my cousin. Okay, he made $110,000 scalping Bitcoin. He's cashing out on Friday, so he's going to keep 80% of that. But with Funding Talent, when you're in the simulation, when you're in the challenge, okay, number one, it's a demo account. They want to see who's a real trader, because obviously they want to fund talent. Okay, so they don't want to fund someone who doesn't know how to trade, because those guys are going to just continue to pay the challenge fee, and maybe they lose, and then they're going to continue. That's how they make their money on the side, like that. But when they find really good traders, what they do is when you get to the elite account now, they switch your broker, because I believe when you're in the challenger, like HankoTrade or something like that, and it's got higher spreads, higher commissions. But once you get in the elite account, they put you with a different, more preferred broker, their broker of choice. And even Blair said his spreads are lower, commissions are lower. And what they do is, now you're a funded trader. So as long as you don't break your daily loss, you're a good trader. They copy and paste your trades. So essentially they made $110,000 by copying Blair's trades, as long as you're in the trade for 10 seconds or more, because it allows their robots, their bots, their algorithms to copy the trade. So they made 110 off of him, and they're still going to pay him out 80%. So they make an additional 20%. And it's a cash cow for them, and it continues. And then think about all the other people that are trading with the spreads and the commissions, that these guys are they just started. They're Canadian. They started in 2019. So it's they fed off of FTMO. FTMO was like the first prop firm that started, but they had their profit sharing was a little bit shitty. It was like 60-40 when they started. And then they went 70-30, and then these guys came in and went 80-20. And but that's how they basically work. They're making money, like tons of money. And then there was guys that tried to manipulate it. They were scalping under 10 seconds with high lot sizes, and they broke them. They went for like $3 million. And Funding Talent now did not pay them out, because they made a rule, because their robots couldn't pick up that trade for less than 10 seconds. So now you have to be in a trade for minimum 10 seconds. That's where they're copying your trading. So that's basically what's going on with that. That's how those things work. But they work. Like if Blair gets paid 80%, then I suggest everybody tries these challenges. Dave and I will help you guys pass them, learn how to get your pips, guys, and you can get funded and trade up to it with $100,000. And then when you guys get really good, instead of doing like standard lots or 0.5s or 0.2s or 0.1s, whatever you guys are normally trading with your accounts, you could look at Blair. He's doing 5 lots, 7.5 lots on Bitcoin. You see, he's just scalping for like 5-10 pips, and he's making 110,000 guys in 3 weeks. It's just this weekend. And another thing with Funding Talent, you're allowed to trade Bitcoin on weekends. With us at Fusion, they don't have Bitcoin trading on weekends. They close Friday and open Sunday night. So he made 64 G's on Saturday and Sunday. Telling you guys the truth, man. So yeah, why don't we open up a broker, guys? We all pull our money.